All right, so today's video is for any real estate investors, real estate agents who are looking to purchase or cash out on an investment property, and you want to understand what a DSCR loan is. You've heard of it before, and the most important thing when you want to build up an investment portfolio is just finding the right lender and loan options, because there are a lot of options out there that won't work and will really stretch you and affect the ability for you to buy more properties. So this is one of the solutions, a DSCR loan. My name's Megan Marsh, and I am the co-founder of Collab Lending, Collab Capital. We were just named 2023's Regional Brokerage of the Year. And personally, I've been investing in real estate for the past 18 to 20 years. I was 24 years old when I bought my first investment property there in the upper left. I now have 40 buildings, from single family units to 2 units and 11 unit commercial buildings. And I still run multiple businesses. And I was just also named Success Magazine's top 100 leaders and 2022's Women of Vision. So you are in really good hands, and you're getting the right information if you are a real estate investor. So next thing on here is, here's what I'm going to cover in this video. What's a DSCR loan and why real estate investors should know about them and care, how to qualify for one, and where can you get one. So typical situation for most investors is you go to the bank that you have your bank accounts with, or another bank. They tell you don't have enough experience, you can't cash out. And you're like, what the stink? Like, this is stupid, embarrassing. I'm not going to do it. They waste too much time. You lose the property. So why does this happen? There are a ton of different types of lenders. The 4 main ones are the banks, your depository bank where you have bank accounts, a retail lender, an online lender like Quicken, Movement Mortgage. Then you have correspondent lenders. They're a smaller retail bank. Those 3 lend their own money, so they have to have lower risk. Whereas a broker, a mortgage broker, a commercial broker, if you find the right one, because some have these and some don't, that's where you're going to find success. I learned a long time ago, all the professionals that I work with, they are real estate investors themselves. They understand then when I invest my money in those things, they understand the things that I do, and they usually have more solutions when they've been through it themselves. So that would be one recommendation. Now, what is a DSCR loan? So DSCR is a metric. It's a calculation that a lender does to see if the property and you have the ability to pay the mortgage payment simply. And it stands for debt service coverage ratio. And it tells them if enough rent's coming in to cover that payment and if it's a good risk for the bank. Now, where do you apply for them? Like I said, you want to find the right brokerage that can help you and has more than one DSCR loan. Because the bank that I have that will work with first-time investors is not the same bank that works with a more experienced investor or someone buying a 10-unit versus a 2-unit. So you want someone with lots of options. Good to know. How do you qualify? You need to have the right DSCR ratio, and each lender is different. There is no hard and fast rule. I would say your local banks want like a 1.25. The higher that number, the better the DSCR is, the less risk. So 1.25 versus like a 0.9 is 0.9 is lower, and some places will not lend to you with that type of a ratio. So asking, what is your DSCR ratio requirement? Your credit score also will affect how much money you need to put down, and just making sure you have the funds to be able to purchase. So this little chart here is showing you the different types of loans when you're buying. So the first one is only for those first-time investors. If you're doing this your first time, use an FHA loan. It's the only time you can buy a 1 to 4 unit with 3.5% down. It is in your personal name. You can get some income from the unit you're not going to be living in. You can do up to 30 years, but it's a great first loan. Then conventional loans, those are your vanilla loans. You have to qualify personally. So you need a job for a conventional loan, or you need to have 2 years of rental experience to use that income to qualify, or you need to make a lot of W-2 income to be able to purchase this way. Then your commercial banks locally, they do a mix. They get your personal financial statement and they look at DSCR. So they do a combination. You're more likely at a local bank to be told you don't have enough experience, They typically do an amortization of 15 years. Some will go to 20, but they don't go to 30. And the rate's good for usually 5 years. You'll find a prepayment penalty. The last one that got cut off is a broker. So a broker will be able to do a DSCR loan with 15 to 25% down, depending on the units. They do a different DSCR calculation. It can be amortized over 30 years. It can be locked in for 30 years fixed, or you can do a balloon as well if you want the lower interest rate and the lower payment than, the rate being a little bit higher for a 30-year fixed. So how do we calculate DSCR? So DSCR is the net operating income over the debt service or that mortgage payment. And so if you go to a bank where your bank accounts are, they're going to calculate it differently than a broker will. So how a bank calculates DSCR is they take the gross rent. So let's use easy numbers. $1,000 a month times 12 is $12,000. Then they're going to deduct out that $2,500, let's say, for 5% vacancy rate. Utilities you are going to need to pay if you're paying property management services. And so they're going to deduct out that. So that means your gross rent is $9,500. They divide that by 12. So the top number is $791. And then over 15-year amortization on that mortgage payment would be $1,082. So when you divide that net operating income of $791 by the mortgage payment, you get a 0.73. So in that case, the bank would not do the loan. Versus a broker with the same scenario, they don't deduct out the operating expenses for the net operating income. They literally just take that coverage is the rent, and the appraiser has to state what the market rent is on the appraisal. They use it, that $1,000, they divide it by the mortgage payment, which it's lower, $911, because it's over a 30-year amortization. Now you've got a DSCR of 1.1. That's better, just a different way to calculate it. And although there's no rule on the DSCR, and each lender figures out what they want, I would say 1% is around where I see the average, but there are some places that go lower and some places that go higher. And the biggest thing is we don't always need tax returns. I will typically collect them so I can just see how you qualify and what's the best way to do things, but we don't submit them. It's more, they need to verify you have the income for the down payment, but you don't have to have a job, and they just take rent over the total PITI mortgage payment. If you're buying single families, you can put 15% down. And even if your score is lower, you can do it. You just have to have a bigger down payment. So some people are thinking, because if you compare the DSCR to broker, the rate's going to be higher. It's 30 years versus 15. It's a different index. So keep that in mind. But if you don't qualify with the other options, then, it's either you don't do it or you have to report more income. But I always say to people who are self-employed, hey, take the higher interest rate, because you'll only pay a couple $1,000 in interest more a year. Because if you go back or you start recording more income on your tax return, if it's with properties or if it's with your business, an extra $50,000 that might help you qualify one of the other ways is going to have you pay an extra $14,000 in taxes in that 1 year. I'd rather just take a little bit more interest than that much more in taxes. So just something to think about, and you will cash flow better by having that higher amortization, but you can pay more than what the payment is. I have a whole team here of fantastic loan officers who all know how to do these products. Many of them are real estate investors themselves. It does not matter. We can lend all across the country in different states with this loan product. So what I will do is, how can you apply? Down in the description, I will put a link if you want to just apply, and we'll reach out. If you want to schedule a discovery call, mention this video and let them know that you want to work with our DSCR team. If this was helpful, I'd be honored if you would subscribe. We're going to have a lot more videos for all of you that are real estate investors, business owners who are looking for financing solutions for investments in commercial properties. Otherwise, thanks for tuning in, and I can't wait to see you guys next time.